Welcome. I'm Phil Grandy of philsgang.com. We've been teaching folks like you, retail investors, since 1998, how to maneuver the stock market, how to short, long. So when will this market actually have a crash again? Seems like it goes up every day. In fact, here's something interesting to look at. Take a look at this. The institutions, which are the big players that contribute 80% of the action to the market or volume, they dumped stocks, as you recall, back here in February. What did they dump? They dumped tech and they dumped semiconductors. And we had a 20% pullback. And then all of a sudden the market turns around and we have this big 30% rally to the upside. But guess what? The big institutions were still dumping semiconductors and tech. So how could the S&P be rallying when they're still dumping? Well, it's called stock buybacks. If you recall, it always used to be what drove the market has always been earnings, which is income generated from your business, and profits that you make after your expenses. That was the mother's milk of the business. Earnings, earnings, earnings. No more. They don't need that. They replaced those in 2008 with stock buybacks. Here's how it works. So you have 100,000 shares, we'll say, in a tech stock. And the stock market, also they start dumping that stock. The CEO sees the stock being dumped, so he goes in and buys that stock back. But he doesn't put it in the outstanding shares. Now the outstanding shares are dropped from 100,000 to 90,000. Why didn't he put it back in? Because by reducing the outstanding shares, earnings will go up and push up stock price without increasing sales or anything else. It's called unearned increment. Sounds like it'd be illegal. Well, it was, right up until Reagan. Reagan decided to make it legal. It's been legal ever since. So the more you reduce the outstanding shares of your stock, whether you're Apple or NVIDIA, the stock will keep going up without having increased earnings, increased profits. So that's what they've been doing. Now, where do they get the money to do this? Well, the CEOs benefit from increased money supply. The Federal Reserve will call the Treasury will print a bunch of money, give it to the Federal Reserve takes the money and gives it to the five biggest banks. The five biggest banks didn't lend it to the CEOs of these big companies. The CEO goes out and buys those shares back. But remember, he makes sure that the outstanding shares continue to drop. The more the outstanding shares drop, the more earnings go up without earnings, and profits and stock prices will go up. It's called unearned increment. Like I said, it used to be illegal. Go to jail for that. No more. So that's what they've been doing. And so so every time we think there's going to be a crash and the market pulls back, this is exactly what they do. But here's the fun part. The fun part is this. After the CEOs buy those stocks back and they make sure the amount of stocks outstanding are shrinking so the stock price goes up, they use what we call the tourist investor. They know the tourist investor knows nothing about the market, but he sees the stock price going up, especially on tech stock. He jumps in and starts buying. Now, where does he get his money? Called margin accounts. Wall Street uses them. Wall Street's going to screw them. Wall Street gives them the money, lends the money to keep buying stocks, to keep pushing up to keep a balance, to keep a base underneath the stock. The minute the CEO no longer decides to buy his own stock back, and you start seeing the money supply decrease, price drops, and now all of a sudden the investor, he's sitting there seeing the stock price going down, the tourist investor, he panics because he gets a phone call because his margin account, he's down 10,000. They want a check. So no, just sell my shares. Then another guy sells. So soon there's a panic in the market, and that's how the stock market crashes. So all you have to do is watch that increased money supply. It starts shrinking, and you start seeing a crack in margin accounts, then you know the market's going to crash. you know the market's going to crash. And everything just falls in place. You end up having a strong dollar instead of a weak dollar. Everything just falls in place. That's how it works. So to learn more about the stock market, how it works, and my stock picks, go to philsgang.com. Free for 10 days.